Hello everyone, I'm James. Welcome to the live stream. It's wonderful to see you all. I've just come out of a live stream and I'm going into a new one. So there you go. No rest for the wicked. Just getting my audio set up. Welcome to the live stream everyone. I'm glad you're here. It's an exciting week ahead, I think. All sorts of things moving, particularly over the weekend, which we're going to talk about, including Bitcoin, of course, and some of the other crypto. And we'll go into some of the energies and metals. I think those are the focuses today. And we'll get going in a few minutes' time. If you're long on Bitcoin, don't sell your Bitcoin. And if you're thinking of selling Bitcoin and you're not long, also not a good idea. Hope you all had a great weekend, folks. If you can hear me well, please type something up in the chat. Just say, yes, I can hear you well, James. That's going well. Just to make sure that all the mics and everything are set up correctly, because it can be a little bit complicated. I'm just going through all the settings. Seems to be okay, which is good. That's what we want. Maybe my head's a little bit close to the top of the screen. I've got my Ola Prime shirt on. I've just come out of a live stream with Ola Prime. G'day, Martin. G'day, Makosny. Let's rock. Hi, Fatima. Nice to see you. Welcome to everyone that's here. And welcome to a brand new week with all sorts of exciting possibilities that we're going to talk about shortly. We're going to be finished in about half an hour today because I've got some further work to do shortly. So, excuse me, we're going to try and be as quick as possible and get the main function or main sort of trades and setups identified and a plan produced. Hi there, Dennis. You heard I said, Dennis, don't short Bitcoin. Don't do it, mate. Abdullah, nice to see you. Welcome to the live stream, and welcome to everyone. It's great to have you here. I really enjoy my live streams. As I said, I've just come out of a different live stream with a different company, and I'm realizing straight away how fun and pleasant it is to be amongst my own community, or different. It's just more familiar and more comfortable. So welcome to the live stream, and thanks for being here. I really do appreciate it. Whilst we're waiting for the next couple of minutes before we start, please press the like and subscribe buttons below the video right now. Yeah, so press the like and subscribe buttons right below the video. Make sure you've done that. Otherwise, in 30 seconds from now, your stream will go off and you won't be able to get back in. I've set it up. I've sabotaged it so that you will never be able to get back into the stream unless you subscribe right this minute and press the like button. So welcome, everyone. Hello, Emily Trading. Nice to see you on a happy Monday. I'm glad you're having a happy Monday, Emily Trading. And it should be a happy Monday. All right, folks, I'm going to start straight away just to save time. If you missed the first part of this video, please rewind and catch up a little bit later on. And I'm going to go into the charts now and start talking about what's going on and what my plan of attack is. So let's start with currencies, and we'll do the traditional route. Let's start from left to right. And first of all, I'll look at the dollar index as always, because the dollar kind of controls everything. And your starting point when you start out trading should be, what's the dollar doing today? What's it going to do? And how will that affect the markets? Now, my idea is that the dollar is on a weak path and that we're heading down and we've got some way to go still. On this page, you'll see that I've got a megaphone pattern with the dollar index sort of, I don't know, 3/4 of the way towards the bottom. And we reached the top on a couple of occasions. We reached the bottom once only since the beginning, and we now need to reach the bottom again. And the 78.6% Fibonacci level, which is more or less at the same price. That doesn't mean we're going to go down there right away. And you can see we're bouncing a little bit off the lower 200-period Bollinger Band right down here, center of your screen. But it's not a very convincing bounce. And you see the same on the euro as sort of a feeble, weak retracement back to the 20, slightly above the 20, but looking very feeble and weak, as you can obviously see yourself. No big moves, no big candles, tiny little dribbling moves up and down, but just angling upwards. So it's not a strong move, it's not an impulse move, it's a corrective move, I expect the dollar to continue to move down. That will drive the euro, the pound, and the Japanese yen, the Swiss franc, all up against the dollar, Australian dollar too. So we're looking to buy the majors against the dollar, and I'll be looking to buy the euro into any dips. We don't have any yet. This is the 4-hour, sorry, this is the day chart on the euro. We have now reached my first target, almost, on the euro, and therefore we're pulling back. This is the 78.6% Fibonacci retracement, which I identified last year, really. I've been looking for this level to be approached for at least 6 months, I would suppose, and we got there, and we're now trying to turn around. Now, this is an inflection point. It's the 78.6% fib. It's the top Bollinger Band. Excuse me, but the dollar is on a path downwards, Just because we got to resistance, and just because we're turning down a wee bit, doesn't mean that that's a top. Don't be misled by these little dribbles down. As you saw on the dollar index, this is dribbling, and it's not surging downwards. There's no tide. There's no full moon tide or surge water going on. In other words, any major activity is dribbling down pathetically, which means there's not a lot of momentum, and probably, and I'm not going to do it, you'll see some divergence on the stochastic, the RSI or the MACD. So I'll be looking to buy the euro into dips, but I think maybe the 50-period moving average and this previous swing low, and that's actually where we got long on the previous occasion. Could we get all the way back down there, rebuy, rinse and repeat, and go back to where we were at about 1.18? Possibly. We'll have to wait for that one. But in the meantime, we've got a long on the pound. We've got 2 long positions on here. One's out of the money. Excuse me, one's in the money. Actually, 2 are in the money. One's out of the money. So we got long there originally. I took partial profit on that. Actually, most of the profit, really. So let's ignore that position. Let's count these last 2 ones. So let's assume that one's been dealt with. We've got one here from the 50-period moving average, bouncing off the trend line, previous support level, black line here, illustrating that we reached there a double top swing high, almost a double top swing low, a double bottom swing low here, and then basically a double bottom swing low. So double top swing high, double bottom swing low, and we're approaching it from the top this time after having bounced off at the previous occasion. So I kind of like that, and considering that I think the dollar is moving down overall, even though it may bounce around a little bit, may have to retrace a couple hundred pips this way or that way, I still think that the dollar is moving down, and therefore we should see a rise in the majors against the dollar. I do like this area to buy the pound very much. Not only is it the 50-period moving average, the red line, it's the previous swing low, over, under, support resistance level, and the rising trend line. It's also a 50%, I think it's 50, probably 38, retracement of the move up from that last swing low up to this recent swing high, and not quite, almost 38% retracement. So in this region here is a good area to be buying the pound, in my opinion, and because of that, I'm now long. Excuse me, I've still got a bit of a cold, and we're also short on the pound yen and the euro yen. Pound yen moving down a wee bit, excuse me, and the euro yen, I don't have the chart on here, but similar to this, just moving down. We've got 2 tranches, one out of the money. On the euro yen, I'm fully hedged at that sort of level. On the pound yen, I've got 2 short tranches. My target for the pound yen and the euro yen is optimistic and aggressive, but I think we can get 2,000 pips downwards out of the pound yen and the euro yen each. And that's just a general, gradual, and consistent unwinding of the dollar carry trade. Now, I did explain the Ola Prime live group this morning, earlier, just before this one, that although we're long on the euro, or considering wanting to get long on the euro and long on the pound, I'm also long on the dollar Swiss franc. Now, this is opposite direction to the euro longs and the pound longs, because this is a long dollar position. Those are short dollar positions. So even though they're not the same instrument, they're very highly correlated, especially the euro and the Swiss franc. So we're basically long the dollar against the Swiss franc, but short the dollar against the pound. Those are our current positions, and considering we want to do that with the euro too. So it's a bit of a hedge. We're long the Aussie, long the pound, but short, long the Aussie, long the pound, but also long the dollar Swiss franc, which is in the opposite direction v the US dollar. So that's a bit of a hedge. This is a technical play on the Swissy, big bounce, big area, big zone, 200 Bollinger Band, order block, oversold, loads of things going for it. and various reversal candles. And then we're long on the Aussie, and this one's just an interesting one, and it's taken some time to play out. But if you remember, we got long on just after this big dip down. I don't know why these arrows aren't here. It's because I got the black bull chart. Let me just quickly change this to, is that the Aussie USD? I can't remember which chart I've got the stuff drawn on. I think it's Oanda, or it could be Pepperstone. Yeah, that's this one. So there's the Aussie against the US dollar, and basically we got long after that big dip down, spike low, clean out, panic clean out. That was the Liberation Day clean out, and we bounced back up again. We've now reclaimed all of the moving averages. There's the 20, the green one, the 50 is the red one, the 200 is the purple one, just where we sort of bounced off recently. So that's my idea, and we're long. We've got 2 tranches on this, and essentially now we've formed the symmetrical pattern. It's an inverse squiggly bracket or an inverse head and shoulders, same thing really. And the target for this is really just back up to the top at about 0.7, and that would form a beautiful inverse head and shoulders, inverse squiggly bracket reversal to take us back up to there. So we're trading at 0.65. We could get 500 pips out of this one. So far we're in profit, and that's looking good. Today, or this week, let's put it that way, is the day when this needs to break up higher to complete the symmetry of this pattern. We've got the top 200 period Bollinger Band curling down, and the bottom 200 period Bollinger Band curling up. That's called a pincer movement, a Bollinger Band squeeze, like a claw. And when you see that, you know that there's going to be a Bollinger Band expansion. At some point, the Bollinger Bands will start going like this, diverge. One will be heading up, and the other one will be heading down, and that's when this price will move. So that's imminent, about to happen. I'm hoping that the direction of that move will be up and not down, of course, because I'm long. But we're going to get a move fairly shortly. So that's all the currencies. Now on stocks, I'm now fully long on the NASDAQ, fully long on the S&P. Not much to say, apart from the fact that the stocks are at very high levels and moving higher. So we're now buying high and we're not buying low. So we got a whole bunch of stuff here. We were short originally, if you remember, after the Liberation Day sell-off through the bottom of the channel. Then we got short again as we bounce back and try to catch the move back down again at the 78.6% fib. Well, we had a Zweig breadth thrust which pushed the whole lot up, and a whole bunch of circumstances which have pushed these markets up higher. Now, there's that double top, previous all-time high on the NASDAQ. We're above that now. We're approaching the channel center line. We're long, and we've got various other targets above us. We've got the channel top, or that's actually a rising wedge top. The top 200 period Bollinger Band, let me give you some numbers here. 23,600. I'm just assuming if we got there today, of course, time will move these along a little bit. And then 24,000, top of the rising wedge. And then if we were to get to the top of the long-term channel, that's about 25,000. And that's all the way back up here at this blob. I've had these blobs drawn in here for months now, and it looks like we may actually reach them. So maybe they haven't been in vain, and they've been there correctly the whole time, just waiting for this price to get up there. So we're long on that. We're also long on the S&P, and no other positions apart from one single solitary, tiny, not tiny, but relatively small long position right here. Underneath, admittedly, the rising over-under trend line, which makes it dangerous. Excuse me. But when you look at it from a different perspective, we're above all the moving averages. We're above the all-time high double top breakout, and particularly above the 20-period moving average, which is a short term, and I'd say within like sort of a week or so, a few days, a short-term directional indicator. When we're above the 20-period moving average, that's the green line. In the very short term, we're bullish. When we're above the 50-period moving average, that's a red line below there. In the medium term, we're bullish. And when we're above the 200-period moving average, that's this purple line further down, we're in the long term bullish. So right now, we're bullish in the short, medium, and long term on the S&P from that perspective and that one alone. We are underneath this trend line, and we've got resistance above us. We've got the 200-period Bollinger Band above us, which will also be resistance. And we've also got the 1.618% Fibonacci extension level up here near the Bollinger Band, and that's at about 6,500. We're currently trading at 6.2 and a half. I think we could easily get to 6.5. And then beyond there, others are calling for much more. Others are specifically calling for $7,500 on the S&P, and that is the 2.618% Fibonacci extension level. Could we get there? Quite possibly. More money flow, more money printing, easing up of everything, gung-ho, FOMO, YOLO markets, no problem at all. So we're long for that perspective, from that perspective, and for those eventualities. I've also got a long position on MSTR. Obviously, that's going to go ridiculously bullish with Bitcoin doing its thing. We're long from 360. We're currently trading at almost 460. So we have $100 on this move. Admittedly, we've taken some profit, and we took quite a large chunk of profit off here at the orange arrow, just above that previous swing high. So we've got a good move on this, $100 profit, and I'll be looking for this to move up, actually, probably, and it might sound ridiculous to you. We've got 3 distinct levels to go to. First of all, the top 200 period Bollinger Band, and that's at 500-ish, 500 and some change. Then we've got this previous all-time high at 541 and some change. And then we've got the blob at the over-under trend line, I suppose, which I had drawn in. We've been trading this all the way back into early last year, well, sort of mid last year, around about here, well, sort of third quarter of last year. And we were short here. We got long again. We'd be trading sort of through this region here. But what it did was it formed this beautiful trend line, which I was able to draw in at that time. And you can see how nice that is until we fell through it. All right, so many people will have removed that trend line. That's the purple one that's rising up in the middle there. Many people will now have removed that. But don't take your trend lines off. Always leave them on, as long as the price is there and thereabouts and has a chance of revisiting the same trend line. Once we'd broken down through that trend line, it looked like we were never going to get back to it, but lo and behold, as time has gone on, we have a chance of reaching back up to the same trend line, way above the current all-time high, and more towards the $600 level for MSTR. MSTR bulls will say, well, you're just being incredibly conservative on this. This is going much, much, much higher. To put it in the same ilk or the same classroom, I suppose, or team as names like NVIDIA, and maybe other names like ARK-K could even approach this sort of exponential move higher, the innovation fund. So doing an NVIDIA type thing, MSTR, and if you recall in the early days of NVIDIA, we've had the stock price being diluted many, many times. But if you were trading NVIDIA down here in 2023, 2024, at what was then equivalent to about, I don't know, $5, and we're trading at 163 now, then it wouldn't surprise you that I say and I estimate that we could see the same sort of thing in MSTR, Bitcoin, all of these new names. Don't look too far to the right and say that's a mountain, an Everest to climb, we'll never get there. Look to the left, see where we've come from and how many times we've done those Everest-like climbs. Talking about Bitcoin and so on, let's have a look at it. So my approach to this is incredibly simple at this point. We have a flagpole, a big bull move, bull flag, and another flagpole, which is equivalent to the size of the original one. If I squeeze the scale down, we can see exactly where that ends up. It ends up at the next Fibonacci projection at $135,000 for Bitcoin. If I'd said that to you 2 weeks ago, when we were down here at 90-ish on Bitcoin, and I said in a few weeks' time we'll be at 140, you would have laughed at me. Well, we're almost there, and that was just a few weeks ago. We're now trading at 122. We've only got about $10,000 to go to meet the end of this trend line or this projection based on the bull flag. So there we go. There are other sorts of projections that I can add on here, which actually take this price up a lot higher. And I put this up on X. Go and have a look at my, I'd really like you to do it. If you're a Bitcoin trader or you're thinking of trading Bitcoin, or if you're thinking of investing it and not trading it, which is probably a very good idea in any case, I wouldn't bother too much with trading it. I'd just buy it and hold it, which is what I'm doing. I'm trading it and I'm hodling it. I've got cold storage and I've got a trading account, and I've got soft storage or online storage as well. So I've got hard, cold, I've got soft, warm, and I've got trading accounts all dealing with Bitcoin. Choose your poison. You might not want to trade. You might want to invest. You might want to have a cold wallet or a warm wallet. You might want to only trade and not invest. You might think it's got a poor long-term future and you only want to trade it because it moves a lot and it's trading quite beautifully at the moment. Whatever your idea is, go and check out my tweet on X, my post on X. I'd like you to have a look at it. And it points out my strategy, my plan, and my path for Bitcoin, what I'm planning to do for and it really just takes us over the next couple of months. So in a couple of months' time, I think we could be higher than this. I'm not counting on it. Go and check out my tweet on X and see what my plan is in terms of maximizing profit from Bitcoin and then protecting my Bitcoin from loss or theft or overtrading or the things that we generally waste our Bitcoin on. All right, so that's Bitcoin. And when it comes to Ethereum and XRP, well, I'm long on all three of these. I've got longs on Ethereum and XRP from quite a long way down. And it's very, very simple. Keep your trading simple, folks. Where are we headed? Back to the top of the range. So $4,000 for ETH. We'll see what happens there. I think we could go a lot higher. I think we could go to 5, 7, 8, 9, 10. And then that's it. And then XRP, one of the most beautiful breakouts. I pointed this out in my live stream yesterday and in the previous videos. Was it Sunday? Yeah, that was yesterday. I did a live stream yesterday as well. So XRP, basically a bull move, bull flag, hugged the top of the flag for ages and ages and ages. In fact, since the beginning of the year, May, exaggerating. So since May, we've not got down through the bottom of the channel center line on XRP. We hugged the top, formed a base, broke out. Very, very simple. I've got positions on there too. Decent positions. Those are only 3 cryptos I've got. And I'm a Bitcoin maximalist, so most of it is in Bitcoin. I'd say 80 to 85% is Bitcoin, a little bit in XRP, a little bit in ETH. And then when it comes to gold and silver, well, I'm trying to get long on silver. We haven't got a position on there yet. That last rally left without us, but I'll get into it at some point on a dip or on a rally. And we're also long on gold. I've now switched from short. We've taken a little bit of profit on our gold shorts here and there. We've taken no losses. Maybe actually probably $100 worth of shorts, actually, if you add them all up. But now we've broken up out of that little sort of, I don't know, attempt to break down through the trend line on 2 occasions, and we're holding up. And we've also got a little bull flag here on the, let's go to the 4-hour, little bull flag there. So, excuse me, rally up, bull flag, breakout. Very similar to what we saw on Bitcoin, and so we're long. That's gold. And we don't have a position on silver because that went off without us. But I have a plan. And my plan is very similar to Bitcoin, actually. And it looks like this. I think that's where we're heading. $41 on silver. And we're trading at 35 now. 38, are we? 38. So we're a little bit late, or very late on this. So I'm going to have to wait for a correction, a dip down to 34 or even 33. So that's my plan on silver. But we're very close to the top now, I think, before a more serious correction. And that starts at about $41. So we'll probably just get to $41, and maybe we can come all the way back to the breakout pullback. Always look for these breakout pullbacks, folks. There's the breakout, flat top, breakout out of an ascending triangle on silver, breakout, we haven't had the pullback. The pullback will come, whether it comes this week, this month, or next year is impossible to tell. Because the markets are impossible to read quite a lot of the time. So this could sort of move up to the top there, but I think we'll get this dip back down to the breakout level. Whether it's going to be sooner or later, I don't know. But when it happens, I'll be waiting for silver. I think silver could go to $60, $70, maybe even $100, along with copper, which I think could go to $10. And I know I said this morning on the Olive Prime live stream, and I got a bit of a gasp from various quarters. But copper has closed at its highest price ever in the last history of copper, above $5 last month. And so we're very, very bullish on copper. We had the breakout. We got long. We had 3 long positions on there. We took them all out at the top there, and we got long at the bottom here again. Long on the breakout. That's the breakout pullback on copper. Breakout, pullback. We've got long. Still heading down. It's above our last entry level. We're still in profit. But it's going to faff around here for a bit, and eventually, and it could take hours, days, or weeks, it should lift off and keep moving up and consolidate and move beyond there. And my target for copper is about $10. as I said. And I probably have a few more gasps coming out of the crowds. Now let's talk about natural gas. Everyone's interested in natural gas and oil. Let me start with uranium and just close that out. We have no position on URA, waiting for a dip down to 30 on URA. We're currently trading at 38, long way down to go. So no position. We've been left behind, although we took a lot of profit on this. Actually, more or less at the same level that we're at right now. So we got long at 22, and we got out at 30. It wasn't 39, I think 38.8. So massive trade that, but it's way too neat and way too linear. But the way it looks, like it doesn't really care. And now we have this another bull flag forming. It might be opportune to go long and just get back into those trades. But it's too high, a little bit too risky for me. And in lieu of that, I'm just going to hold on to my existing long uranium positions, which I have on a different instrument. That's UEC. And on UEC, I'm long from down around $4. I can't remember. I've got different charts. I'm running the Black Bull charts here now because I was doing some other work with Ola Prime. But anyway, we've got a good tranche on there, 2 long positions on UEC. I think from $4, I think our first position is at 470, 475. We're currently trading at 660, 665 right now. So I'm going to hold on to those longs. And if we don't get a chance to buy URA again, I'll just carry on adding to my UEC longs and build that position up instead. Now, let's look at natural gas. What a difficult instrument to trade over the last number of days. So here we are. And let's just quickly, before we do anything else, look at the last candle. This is a 4-hour chart at Black Bull, my broker. And this is the Henry Hub price, the futures price, the front month. And the last 4-hour candle, we got short there 4 hours ago, I suppose, because we've had a 4-hour candle since then. That's a hanging man candle. It's a bearish reversal candle. And we've taken that up to the 100 period moving average. We have a couple of problems here. One, we've broken above out of this falling wedge pattern represented by the black lines, and that's a bullish move breaking up above the 20 and the 50 period moving averages and gapping up over the weekend and holding there. But only 2, and when we gapped up only to the underside of this larger pattern, and you can see that's represented by these red lines, which also seems to be a bear flag. So we've got the big move down, the flag formation, and then we broke out through the bottom quite recently. This is the 4-hour chart showing you the futures from the Henry Hub, from my broker at Black Bull. But now in the last 2 4-hour candles, we've actually closed back inside that potential bear flag, but we're still below the 20 and the 200 period, the 100 and the 200 period moving averages. There's a useful thing that you can do, folks. Switch across to the NATGAS future continuous price at Black Bull. Not Black Bull, Pepperstone. So what we're seeing here is the 4-hour chart of the natural gas continuous price offered by Pepperstone brokers in the UK. And so it's a different instrument, different price. We're trading at 345, 343, whereas on the futures, we're trading at 347. Not much difference, actually, quite close at the moment. But it's sometimes useful to have a look at what's going on this price, compare it to what's going on in the futures. Sometimes this gives you a bit more of a better clue than the futures might do, and vice versa. Look where we've got to, and this is really, really, really important on the continuous price here at Pepperstone on the 4-hour chart. The purple line is the 200 period moving average. The black line is the 100 period moving average. They're right on top of each other, and the price has poked into them and formed this hanging man reversal candle pattern. A lot of people think a spike low means it's going up. Not at the top of a trend, folks. When it looks like that at the top of a strong trend, which we've just had, it's actually more likely to be a reversal candle. Not guaranteed, but more likely. So that is a reversal pattern at the 200 and the 100 period moving average confluence. But once again, we're above the 50, the red line, and the 20 period moving average, simple, the green line. So really, really messy and difficult to read. And we're right at resistance, but we're above support. The resistance above us is stronger because it's longer term than the support below us. But either one on the day could win, could triumph, could work out in their favor. Look to the left as well. We've got a market structure break right just above the current price level, and that's at 346. 346, 375, these are both key levels, and you can see that if we break up through here, the next green line right at the top of the charts, well, closer to the top, is at 375. So that level that we're at right now, then this tiny little swing high at 360 something, and then the 375 level. I'm remaining short, but I have a hedge order in place, and those in my private group know exactly what's going on. If we break up through this level, at some point, I have a hedge order to fully, and not too far from where we are right now, by the way, to fully hedge the entire lot, looking for this to move up to 360, 375, and then potentially even $4, $4.50, and maybe even $5. So I guess you can glean from what I'm saying that I really have no clue where this is going to go next, but I do like, or I did at least, the longer term pattern, which you've now broken down below, but climbed back into, and that's this long-term bear flag. We're back inside it now, but we are below the 100-period moving average, and you saw in the continuous, the 200 simultaneously, and we've also formed a hanging man reversal candle pattern. So that's where we are, and if we move higher and close higher than this sort of current level, I'll be looking to hedge the entire lot, and my private group members know exactly what our strategy is for natural gas for the rest of today and this week. And at the same time we're short on natural gas, we're also short on WTI oil. This moved up a little bit over the weekend, and I'm not lying, folks. I've had an order to sell natural gas at 68.20, I think for about a month. It could be longer even, but my private group members will point this out if I'm being inaccurate. I don't think so. I've had that order in there for so long, and when we got there, and everyone was going, yeah, if we get there, 200-period moving average, yeah, 68.20, looks good, yeah, Moab just selling into resistance, it's going down, wonderful, let's wait for it to get there. And when I got there, half of my private group members said, oh, I don't know about that, it's looking a bit strong, it's moving up fast, isn't it? Oh, it's above the resistance level. Oh, we broke up above that triple tweezer top there. That's very dangerous. And everyone is starting to say, should we hedge? Should we get long? Should we change direction? I don't know why. My order has been there for literally over a month. And we got there, I took the trade, and it's moved down. That's the way you've got to play this, guys. Even if it's rushing up into your sell zone or your planned area of attack, if it's rushing up there with determination and with momentum and vigor, and it's approaching your area, hits your area, you've got to be prepared to act. Because you had a plan. If you don't have a plan, then there's nothing to worry about. But if you had a plan and you didn't act on it, you may as well not have had the plan in the first place, or the plan was good and you're the weak link, or the plan was a weak link and you didn't trust it, or whatever the hell is going on, I don't know. But if your plan is to sell WTI at 68.20 and the price goes there, and unless anything else has changed to put you off that, then you should be acting upon your plan, your trigger. Simple, really simple. Right, now let's have a look at the VIX and the TLT and the South African Rand. I'm going to start with the South African Rand, and this is the dollar South African Rand. Without going into a very long story about politics, which I could easily do, but I'm not going to. This is where we are. We got short there, and we got long there. So we've got a red arrow and two green arrows. Those are the only trades we've taken in the last 6 months, and the fact that we in fact, we did get long down here and we took profit, but it carried on moving up and it moved back up into this zone. It strengthened and then it came back, it weakened. That's the Rand weakening against the dollar if it goes up. And then the Rand got the sudden strength out of nowhere for no other reason apart from perhaps platinum group metals, gold, silver, uranium, all of those commodities were moving up, have been moving up very fast and lending some support to the South African economy, which really needs it. In fact, it needs it so much that there's no reason whatsoever that the Rand should have strengthened so much. And so I'm, as always, long on the dollar South African Rand. Target 20, we're currently trading at 18, just below 18. So there's a good 10% profit available there when that starts going. We have a long position on TLT. I'm looking for this short squeeze to eventually occur and drive us through the top. It's a falling wedge, flat bottom. It could be construed as a descending triangle as well, but depending on how you draw it, it's also a falling wedge, and I think we should or could get a short, sharp squeeze. We're at about break even on this. My target is about 100. We're trading at 85. In fact, we're long from 87 or 88. So we're not actually even at break even. Yeah, 87. So we're actually in a small loss on that trade. And then, VIX. Yeah, so people were talking about the VIX this morning. Shall we buy the VIX? I don't think so. I think the stock markets are moving up because I'm long. If I'm long on the stock markets, I can't be long on the VIX at the same time unless I want to hedge it, which is a perfectly respectable way of going about things. But I'm not doing that today. And the VIX has broken down. If you believe in trend lines on the VIX, which I don't, but I put it in here to humor some of you. Excuse me. The fact that we've broken down through this rising, very shallow trend line on the VIX, testing it from underneath now and moving down. Apparently, all the moving averages above us. Again, meaningless on the VIX. It's a spiky volatility index. It's really, not very, it's not a traditional trending instrument. And the way to trade the VIX, folks, if you're ever in doubt and to keep yourself out of trouble, which I need to help you do because many of you get into trouble all the time, buy the VIX at the bottom of this green block and sell it when we break out through the top. Not green, beige. Buy the VIX at the bottom of the beige block or near it and break out and get out of the trade when it breaks out through the top of the beige block, somewhere up into, I don't know, like the 20s and 30s. So buy at around 11, 12, 13, exit at around 20 to 25. So you kind of want to double it, basically. Get in at 12, get out at 24. Get in at 10, get out at, well, you won't get 10. Get in at 11, get out at 21. Get in at 13, get out at 26. Get in at 15, get out at 30. That sort of thing, roughly. So there's no trade on the VIX right now. Nothing going. And then softs and grains. I know quite a lot of you trade. I'm getting a feel from you guys in the live streams. Thank you very much for attending, by the way. And it helps me out a lot because I'm getting a feel from you about the kind of commodities that people are interested in trading. Sugar is one of them, and I really like this sugar trade. And we're long on sugar. We're a little bit out of the money on one of the positions. This one's slightly in the money, but we've got this falling wedge channel, big spike low down into that support, very, very long-term support. You need the weekly chart, even the monthly chart, to find out where that support is. There it is right down there. Big, important level. And I think we could get up into the next important level. That's this next block above us. And then eventually through these trend lines. So I kind of like this. And I think we could get up into 20 to 22 on sugar. Currently trading at 16. So perhaps a decent profit on that too. Maybe I'm a little bit too optimistic. And then wheat, I like this one too. And I'm not going to bring these up every time we do a live stream, but just to keep you abreast, that's where we are on wheat. As you know, I'm long, and I like this pattern for a breakout through the top. I'm not going to repeat these every time, but I think if you're following most live streams, you'll get the gist of it. And then corn, we're also long on corn. Quite a nice reversal over the last couple of days, just trying to base there. Bit of a flat top megaphone, which is a very bullish pattern. And that's on corn, kind of like that. Cotton I like a lot as well. We talked about orange juice this morning in the Ola Prime live stream. That's going weird. But here's cotton. Really like this double bottom, breaking out of this falling trend line channel. A lot of activity here. And this is a real bottoming formation and pattern. The fact that we've moved sideways forever and a day since then doesn't really matter. It's a pullback in time, as the newfangled traders like to call it. And then orange juice is worth a look. Cocoa and coffee, by the way. Let me just finish these off. I have no positions on... let me just go the other way. I have no positions on coffee. I'm going to go to the other one shortly. Looking for this to happen on coffee. I'm bearish on coffee. I want to sell right there. And it's self-explanatory at 329. Call it 330. Channel center line. Fibonacci retracement. And this falling steep channel top. 330. I'll add some shorts on there. We have no positions on coffee at the moment after having taken profit on those shorts. Loads of profit on that one. That was a really good trade. Same on cocoa, although we still have a cocoa position, and it's shown on the chart right there. And this is what I'm looking for. I'm not going to add or subtract anything from this cocoa position until we get moving. And as you can see, for the last 5-6 days, we have not been moving. So there's nothing much to do to add to that, certainly since the last live stream. And I think that's it, folks. I think I've really tried to cover everything as properly as possible so that you all get an idea of where I stand. And I did a live stream this morning. Go and check that out. I'll put up the link. I'm not sure. No, that one's not public. It will be tomorrow. I'll put up the links tomorrow. Go and find those links on X or on my YouTube channel. I'll put them in all the links. I'll be live tomorrow from 8:30 a.m. Eastern Time on Ola Prime TV. And then straight after that, like we're doing today, I'll be running my own live stream here at ArcisFX. So you'll get me twice a day. If you can tolerate that, I'd be very appreciative of your attendance in those sessions, and we'll have a lot of fun. And I think the Ola Prime is going to be excellent as well. We've got a co-presenter, it's not just me, and you'll meet Paul, my co-host. I think you'll like Paul. He's a crypto man, but he knows a lot about other stuff too. All right, let's go through some of the questions. Roby, nice to see you, mate. Ole from Germany, lovely to see you. David from wherever you are, lovely to see you too. And RGGGGVGDGGI. Hi, James from Alex. What about gas? What's your take on how it jumped up today? Okay, we talked about gas. If you have further questions on natural gas, please raise them, but I think we've covered that in some detail. Good day, Denise. Nice to see you, mate. And Harbinder. Oh, thank you for joining, Harbinder. I really appreciate it. Harbinder has joined our YouTube membership here by clicking the join button below the video. So thank you, Harbinder. I appreciate that very much. Welcome to the crew. Romaine, WTI sell big. Yeah, we've got big positions on that. We've actually got a 3/4 position on WTI, Romaine, which is bigger, and roughly you could say if I say a 3/4 position, if I have $100,000, that would mean only $75,000 short on natural gas, unleveraged. So a 50% position might be $50,000. So I kind of give a gauge to my private group members of the position sizing that I'm taking. And we have a fair chunk on WTI oil shorts, as we have always had. And it's worked out very well for us. So generally, I've been shorting oil for 3 years and with decent size, and we've done very, very well. Good day, Jamie. Nice to see you. Jamie Bridges, not related to Jeff. Hit the like and subscribe button. Thank you, Jamie. I appreciate it. Thank you for encouraging everyone else to do what you've just done. And that's press the like and subscribe button. Marek, natural gas. I think we've talked about natural gas enough. It looks like a correction, says Pool C. Ishak from X. Are you still long on gas? I'm short on natural gas, Ishak. Buenos dias, Edgar. Greetings from Mexico. It's always nice to see you, Edgar. And what a wonderful name you've got. Edgar Antonio Mayoral Manchera. What a wonderful name. I'm very jealous. Denny Sheldon. Nice to see you, Denny, from somewhere else, not from Mexico, I bet. Warren, nice to see you too. What do I think the best bet is on all the trades mentioned? Bitcoin, Warren, I reckon. I'll tell you my kind of idea here. This is why I'm playing this period. I'm going to try and stack as many Bitcoin positions as I can. I'm going to follow this angle. Anything above this line is overbought. Anything below the line is oversold and should be bought. This is the simple picture that I showed you earlier with the rising bullish move, bull flag, and the continuation equal to the length of the original bull move. So if we're above that line, it's the same angle. This is a nice way of doing it because you now can see whether we're going too fast or too slowly. The moment we start lagging, dipping below the line, I'll try and add some more Bitcoin. The moment we exceed, and like we are already actually, accelerating beyond the gradient of this line, I'll look to potentially hedge or take some size off. But I'm trying to ride this all the way up to the top at least at about 134. And then I think we could get to 160 in the next few weeks. So that line is my guide, and my targets are there at 135 and 160. And whilst this is going on, as I said to you, if we're below that gradient, I'll consider it lagging and it needs to be bought. And above this gradient, I'll consider it a little bit too frothy and we need to slow down and be cautious. This is my main play. You asked about what are my main plays. That's it. I've got some on Ethereum, some on XRP. And I've also got longs on gold. I want to get long on silver. That's my next best play. All the metals, gold, silver, copper, uranium, all of those, my next best play. First best play, Bitcoin. Next best, maybe Ethereum and XRP, but let's just put it all in the crypto basket. Next best, all the metals, silver, gold, copper, and uranium. Next best, third best, in other words, stocks. NASDAQ, S&P, MSTR, Tesla, ARK, all of these ones on this page. And the last place is the short dollar idea, in other words, long the Forex majors. When it comes to trading, if you want the highest probability setups and trades, the most predictable markets, and the least noisy, in other words, the most technical markets, try and stay away from currencies. I know currency trading, when I started trading almost 30 years ago, was very, very popular. And it was mostly the only way that retail traders traded online. And almost no one traded online at all, in any sense. But so Forex was the kind of brokers. It's a bit like Bitcoin versus XRP versus Ethereum. You know, the Forex brokers got in first, they got all the business, then the stockbrokers came in. But it was very, very difficult. And because of that, Forex gained a lot of popularity as a trading instrument or vehicle, but it is the most difficult. Most Forex traders have got nothing to do with the charts. Forex trades, currency exchange, is done between countries, businesses, companies that are hedging, mostly commodities, cotton, corn, sugar, wheat, oil, gas, everything, buying for the future, for their production, whatever they're using it for, or, you know, for the retail. So all of these currency transactions that take place around the world take place without a single eye on a single chart. They're just like, okay, I need to be buying 4,000 tons of corn for production in my bread factory next year, and I think that the dollar will be weaker, so I would rather buy it in dollars now before the dollar weakens next year. So I hedge, I place a forward order and book that currency, not looking at a chart, not looking at anything, not talking to anyone, just trying to get the best price on my 400 tons of corn. So that's how most currency transactions take place, and that's why when you look at currency charts, quite a lot of the time, they make 0 sense. I mean, look at this one. I mean, it makes sense to us because we kind of see what's going on here, but it really is a nonsensical chart, isn't it? And all of this stuff is occurring because some big orders went through, now we're chopping around and it'll eventually go up. And most of these trades, all of these currency trades, let's say 90% of them take place because of international trade and government business and arms business and energy business, most of it in arms and energy. And so they don't care whether the moving average is close or the stochastic's overbought, or there might be something from Jerome Powell tomorrow in the news. They don't care. They place the trade and that's that. And that's why currency trading is more difficult. And so I've given you the ranking. I'm going with Bitcoin and crypto, number 1, metals, number 2, stocks, number 3, currencies, number 4. Those are my main trading instruments. That's my plan. And I hope to make a lot of money in the next few weeks because these windows don't come along very often. I'm incredibly busy in my trading right now. And these are opportunities for you to make money or make hay while the sun shines. You should be doing it if you're serious about it, which I am. This is what I do. And so, so I've given you my ranking from 1 to 4, Bitcoin, metals, stocks, currencies, the dollar. In other words, short the dollar is number 4. And then all the others, long crypto, long metals, long stocks, long the major currencies versus the dollar. My 4 plays ranked in that order. And that's all I've got to say about that. And maybe I've said too much. What do I think of the best bet is on in the trades? That's in answer to your question there, Warren. I hope you enjoyed that answer and that was useful to you. Roby, thanks for your comment as well. It's lovely. I'm glad you joined my private group as well, Roby. I've been wanting to meet you for some time, and you've been around for, I think, a couple of years in our videos and live streams. So I'm very glad that you joined, and it's an absolute privilege to have you in there. Thank you very much. Vikash, crude oil, we've talked about. Jim, Gatineau. I like your name too, Jim. And then Abdullah, wonderful name as well. Abdullah, actually, by the way. We're talking names today. Thanks, James. Amit, mystery. Hi, Amit, how are you? Haven't seen you for a while. Natural gas is crazy. Yes, it is. And thanks, James, for fantastic trading the VIX in the past months. So we've had some good trades on the VIX, as you pointed out, like really good trades, but I think we just need to wait and be cautious right now. I'm just going to go across quickly. There's some comments about wild Bitcoin, wild natural gas. Okay, here we go, folks. Hanging man candle on natural gas. Look at both of these charts before I finish off. Hanging man followed by a bearish start, at least on the continuous here at Pepperstone. Same thing here on the futures at Black Bull, the Henry Hub futures front month. So it's definitely a bearish reversal candle at resistance, but we've got loads of support beneath us. That's where we are. Crude oil moving down. And normally, folks, natural gas and crude oil trade in opposite directions. So yes, we're not ideally positioned right now. I'd like to be one long, one short. We're short on both of them. At some point, I think we'll be long on natural gas and short on oil. I think that's what the rest of this year holds. But for now, we're short on both. Have a wonderful trading day, folks. And it's been an absolute pleasure having you here once again, as it always is. And I hope you enjoyed it. And I will see you tomorrow in the next live stream, same time. It's moved out slightly because of my Ola Prime TV live stream, which I do half an hour before the New York Open. And I will put up links all over my socials. Go check that out. You can join me twice a day now. And I'm looking forward to that. And I will be joined by Paul on my live stream at Ola. And we had a lovely chat this morning and talked about all sorts of things. I see gold is moving down as we're talking. And I think that's it, folks. How do I rank natural gas? Well, natural gas I trade all the time, so I don't have a ranking for it. It's just something that I swing trade all the time when it offers an opportunity. And for most of the futures, because I trade the futures mostly, most of the futures contracts get or offer or provide one or two really good trade setups during the duration of that contract. And that's why I like to trade it. So sometimes we just don't get a chance. Most of the time we do. And natural gas I don't put as it's not an investment. It's not an investment vehicle. It's a commodity. And so I don't invest in natural gas at all. I trade it. So I don't have any particular view. The things I'm talking about in Bitcoin, oil, stocks, etc., I'm talking about swing trading and investment potential. Whereas with natural gas, it's kind of swing trading, but there's no investment potential, and I don't rank it amongst those assets. It's not an asset. It's not an investment. It's a messy old commodity instrument that swings violently up and down, and you could, if you're lucky and skilled enough, make some money from trading it. That's all it is. Edgar, I'm catching up replaying 1.75, the part of the live that you missed for being late. Okay, cool. It's not going to be a long live stream, Edgar, so we're finished now, so you won't have to replay too much. Folks, thank you very much for joining. Below this video, there's a link that says Trader Survival Kit. It's a free kit package full of all sorts of fun goodies, which are free. Don't have to pay anything, including some of my music, some of my training courses, ebooks, my G7 trading system, my hedging system, and a whole bunch of other things. And it's all free. So click down on the link below. You can get hold of that. Make sure you get it. I think it's good and useful. And you'll get great benefit from it. And if you don't want to do that, and that's fine, I don't mind, at least subscribe and press the like button to this channel. Thank you very much. And in the words of Donald J. Trump, thank you very much for your attention. I'll see you in the next live stream. Take care. Have a good one.